FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, today is October 8th, 2020. Just gotten word that there will be no stimulus. Maybe that's a good thing for the airlines or for anyone else. You think that stimulus is the way to prosperity? Why don't you send us an email? Let us know your thoughts. Share them with us. The email address is kl@kerrylutz.com. Right now, our good friend is back with us, Eddie Ghabour. And Eddie, hey, what does this mean? No stimulus for you?
You know, right now, I think basically what that means here in the near term is the airlines are really the ones that were needing it the most. So the layoffs that they were planning to do are going to continue in the near term. So from an equity perspective, the airline stocks gave back all their gains this morning and they're in negative territory. And I would expect that to stay. Look, the bottom line is, there's certain areas that do need stimulus, but the stimulus needs to be targeted. And I think that's where the debate is in Washington right now. You've got one side that wants a very large bill that's more broad-based, going to states and many, many others. And then you've got the other side that's really looking, I think, to be a little bit more targeted into the areas that need it the most, like the airlines, like the restaurant business. Bottom line is, from a market standpoint, and I told people this earlier this week, I did not think stimulus is going to happen before the election. So I would expect the markets to sell off here near term, pre-election here over the upcoming weeks as the chances of stimulus hopes start to fade away. I hope I'm wrong. I don't think I will be, but at the end of the day, I would look at that as a buying opportunity for those that have the right risk tolerance and it is suitable for them from an investment perspective, because I think next year is going to be very strong year once we get through this election stuff that we're having to deal with every single day.
And what about the COVID lockdowns here? We're starting to see the courts actually fulfill their function, which is to act as a check upon the executive, both federally and state-wise. We've seen 3 states see their lockdowns paused, and probably that's going to become a trend.
Yeah, I mean, look, you can't just stop living life because of this. COVID is not going away. All right. If you're high risk, you should take the proper precautions, but you can't shut down economies because you're going to do more harm than what COVID will do. I mean, look at Florida. Florida is fully open. They're one of the strongest states economically right now. And look, their death rates are not spiking like so many people were fearing. It's like every time someone gets COVID, it's like a headline. Well, guess what? People are going to get it. That's just the bottom line. And you can't just stay in a bubble for a year and shut down economies. We have to live our life. Businesses have to open up, and people that are high risk have to be very smart about it. But the reality is, and this is what the data is showing, a majority of people that are getting it survive. So you can't shut down the economy because of a small percentage of people that are high risk in this. And that's my opinion.
Hey, I could not agree with you more. When we look at Florida, that's as an example, that's where I happen to live. Yesterday, there were 5 deaths. That number will go up a little bit, COVID related. Don't really know if they were COVID caused or not, because the reporting is so spotty. The day before, 13, or that 12, 14, 16 were in the low double digits. And the fact is there's 22 million people in Florida. So the number of cases is kind of an irrelevant number, really, when you get down to it, because it's becoming more and more treatable. As we saw, the president had symptoms, short of breath, all this. And then by 2 days later, he's out of the hospital doing his thing. So that should be the example held up, that don't have these comorbidities if you're not seriously ill or older. I mean, he's 74. He got through it with flying colors, a little bit overweight, but as far as we know, no other comorbidities. So that should tell us something.
Yeah, for sure. And look, here's the other thing that I think people need to remember is the amount of testing is increasing. So naturally, when you increase testing more, you're going to get the data is going to show more people that have contracted it. But again, you can't hide from a virus. It's here and it's here to stay. We can't stop and shut down our economy. We saw what happens when you do that. That's partially why you've got certain people begging for stimulus. We don't want to go through that vicious shutdown again. And the states that stay shut down the longest are going to be the ones that suffer the most.
Yeah, and that's it. And the states that are shut down, their governors, et cetera, they don't really care what harm they inflict upon the business community, upon the schools, upon society in general. They've given up leading. I got to believe that that's going to be an issue in upcoming election, Eddie.
It would almost have to. Again, I think the average person, no matter what party they're with or support, would agree with the fact that they want to start living their life and going back to their job. And again, if you're high risk, then, there's a different set of rules for you. But the majority of people need to get things going, especially these kids. My goodness, the damage that we're doing long term for kids, in my opinion, for just keeping them home and learning remote. And some don't even have the resources to learn remote. It's not a good situation. They need to get back to school, and you can open things up in a safe manner that protects those of high risk, but at the end of the day, gives people their livelihood back. That's what this country needs. It'll be surprising to see what happens after the election and how much these shutdowns are still in force. So there's definitely some politicizing going on with this virus, unfortunately.
Yeah, unfortunately, medicine has become completely politicized and just no reason for it. Really, if we can get into that another time, it's not necessary now. But our point here is that the risks are extremely low for all but a very small segment of the population. And now we see that the treatments are way better than they were just a few months ago. So even if COVID sticks around, which I'm not convinced, because all pandemics eventually end. They all end. So maybe it's around for another month or two, or maybe it just seriously ends on November 4th, Eddie.
FSN Radio. It's all about what's next.
Lumina Gold, ticker symbol LUM on the Toronto Venture and LMGDF on the OTC, is yet another of legendary mining investor Ross Beaty's Lumina Group. It's advancing the largest primary gold deposit in Ecuador. The resource is estimated to contain 16.7 million ounces of gold and 2.2 billion pounds of copper. At just $7 US per ounce gold equivalent, it trades at an incredible 13% of its net present value. More good news is on the way with an updated PEA study expected in Q2 of 2020. It has unparalleled infrastructure. There's grid power to camp with plentiful, inexpensive hydropower available. It's close to 2 ports and is just 8 kilometers from a paved highway. Water is plentiful. It's at low elevation, and the closest community, which is very supportive of Lumina's effort, is just a 7-kilometer ride. With all this going for it, it's likely to follow the typical Ross Beaty formula, which means big returns to shareholders. Find out more and sign up for notifications at luminagold.com. That's Lumina, Lumina gold.com.
The Financial Survival Network. It's all about what's next.
That would be wonderful if that's the case. But, to your point on the medicine advancements, that's why I'm so bullish for next year. There's so much pessimism out there, there's so much cash on the sidelines. I call it scared money. Over $4 trillion of cash is on the sidelines. Eventually, this money is going to pour into the market, and the market is forward looking. So if you wait for the economic data to look good, then you've already missed the run. So that's why we're telling clients we've been dollar cost averaging into the market in September during the volatility. We will in October. And if the election, God forbid, is contested, that causes the markets to unravel, we will buy that dip again in November and look to be fully invested going into January. Because I think the theme over the next 12 to 24 months is a continuing improving economy, continuing improvement in medicine, and starting to get ourselves back to full employment, because the labor numbers have been amazing. There's not an economist on the planet that thought we would be in single-digit unemployment as we sit here on October the 8th. They were predicting 20% unemployment and just a horrible scenario. And they were proven wrong. And I think that trend is going to continue, again, as long as these states start opening up like they should.
Could not agree with you more. And, we're just seeing these people are basically rooting for the downfall of America. Like, I'm not convinced, and I won't tell you that I am, of the efficacy of those jobless numbers. All right. But certainly here in Florida, the traffic's back to normal. Restaurants pretty much back to normal. In the county where I live, there's still a limitation on the number of people you can have there, but nobody seems to be abiding by it. Nobody really cares about it. It's like they're over COVID, and maybe it's time for the rest of the country to get over COVID. Well,
yeah, there's definitely some exhaustion there. We're seeing it here in Delaware. I'm in southern Delaware now. Our governor's been more strict with us. We're still in phase 2, so we're not fully open. But I'm noticing, people getting back to their life. We'd love to see the restaurants back to 100% capacity, but the activity that I'm seeing on the weekends with traffic, and yesterday there was people on the beach still as we're here in October. Schools, travel, sports have really picked up. So it's refreshing to see some normalcy happening. And again, with all of that increased activity, the death rates and the numbers are fine.
Yeah, and that's what it all comes down to. What really counts are the death rates and the hospitalization rates, of course, right? I mean, when
Absolutely.
you get down to it, and you know what the ironic thing is? I had a friend on, business colleague, talking about how his wife was a doctor at a hospital in Hillsborough County in Florida that's outside of Tampa. And basically, for months, the hospital was empty because they got 20 COVID cases a day. Then finally, the governor ordered the reopening a few months ago. And in July, the emergency room was 95% full. And their media was harping on this, Eddie, like you couldn't believe. Want to know the secret? They aimed for 85% occupancy in the ICU because otherwise they lose a boatload of money. And what the doctor said in this particular hospital is, July looks a lot like January. And part of that was because not just COVID, but all these procedures got put off. And now they're all rushing for the emergency room because some people it's really a health risk to. And this is what we wind up with. I mean, just can't make this stuff up, Eddie. So if I could summarize things, you're bullish for the coming year. You think that the whole thing's been overdone, and particularly the pessimism, maybe we'll recover from the brink of a global economic collapse?
That's exactly right. So anytime there's a ton of cash on the sidelines and a lot of pessimism, while the underlying fundamentals are actually getting better every single day, with a Federal Reserve that's basically going to keep rates at record low rates.
Less. Zero real rates, or 0% or less.
Yeah, I mean, if that's not a bullish case, then I don't know what anyone is looking for from an investment perspective.
Okay, so what's that mean for precious metals? You got an opinion on that?
I think precious metals like gold, we have some gold positions for our clients just kind of as a hedge, but we're going to be overweight value stocks. There's a lot of stocks that have not participated in this market rally that we've had since the March bottom, because you've had that stay-at-home trade, as people will refer to. And now I think you're starting to see over the last couple of months a rotation from overweight tech going into value companies that are going to hopefully be the ones that lead us out of this recession that we're in. And I think those have the most upside over the next 12 to 24 months, is my opinion, because I think the stay-at-home trade, if the economy opens up the way we anticipate, will not be as popular of a trade next year.
Well, Eddie, you are sounding downright like a contrarian here, and you always have a contrarian side to you, I guess. Just tell us, where do we find you? How do we connect with you on the web?
So you can go to my website at keyadvisorsgroupllc.com, and you can find me on Twitter as well, too. My handle is at Common Sense Bull.
At Common Sense Bull on Twitter, and the link to Eddie's website, you'll just see the link in the show notes. Click it, and you get right to him. Eddie, can't thank you enough for coming on. and you're a breath of fresh air. So forget about stimulus, forget about everything else. Hey, what do you think about that? Why don't you send us an email, kl@kerrylutz.com. Make sure you go to the website, financialsurvivalnetwork.com, and sign up for a free newsletter. Eddie, always a pleasure. You be well.
Thank you for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.